A very good morning to all our viewers. Welcome to Opening Bell with me, Stacy Pereira. I'm here to take you through all the news and cues that you need to be looking out for through the trading day as it could impact your day. Well, let's get straight to what we're getting from our handover from Wall Street, in fact, where it has closed mixed last evening with the Dow Jones still rallying for the 9th straight day. Now, Asian markets, those ones have fallen in opening trade today as Japan's inflation has risen slightly in the month of June, coming in at 3.3% versus 3.2%. Now, that, though, has impacted all of the Asian market indices, wherein we're also seeing the GIFT Nifty now indicating a negative start for the Indian markets. But we have a lot to look forward to through the day, one of them being that important earnings from RIL, which perhaps will be a mixed bag this time around. But the consumer businesses are supposed to be doing steady, getting in a steady performance, which could then offset that O2C business. But of course, if you look at how the market has been so far, well, bulls have dominated that weekly F&O expiry that we saw yesterday as well. We saw the Nifty 50 very close to that psychological 20,000 mark. In fact, if you look at the highest delivery that was seen in certain stocks and where all the interest has been, those were stocks like Bata India, Gujarat Gas, Godrej Consumers, even Naveen Fluorine International, as well as Reliance Industries. So that's going to be on top of everyone's radar. But also let me give you a setup of who's really putting in that money into Indian equities. Well, foreign institutional investors continue to be net buyers. They've bought shares worth 3,370.90 crore rupees as of yesterday, whereas the domestic institutional investors, those one are still net sellers, selling about 193.02 crore rupees in yesterday's trade. Now, this is provisional data, but and that is what the setup is looking like. So a little bit of consolidation, one could say, or volatility in the market now that we are this kissing distance to that 20,000 levels for the Nifty. But yes, of course, we have key earnings to be looking forward to. Other than Reliance Industries, there are huge, crucial numbers that of JSW Steel, Ultratech Cement, HDFC Life Insurance, Hindustan Zinc, Vedanta. So a lot of metal and cement names there also, which will be quite crucial to see where that whole sector really look forward to. And of course, in the primary markets, there is the Utkarsh Small Finance Bank. Those shares will list on the bourses today. So we have to look forward to another one making its D-Street debut. But also let me take you through what the F&O cues are suggesting. Well, yesterday we did see about 57 stocks that saw a long build-up. This include the likes of India Mart, Intermesh, ICICI Lombard. Remember, those are the ones that also came up with their earnings. Balrampur Chini was there, Canfin Homes, Bharti Airtel. So those ones seeing that long build-up, whereas 30 stocks saw the long unwinding. Now, these include Reliance Industries, Havells India, Bosch, L&T Finance Holdings, as well as Tata Communication in that list. And if you look at the other end and the short build-up, there were 57 stocks that saw short build-up. These ones including Container Corp, Coforge, ABB India, Cummins India, as well as Shree Cement. And on the exact opposite end of that, in the short covering segment, where we saw 42 stocks that saw short covering, these include Polycab India, Federal Bank, that one had that QIP that was opened yesterday, Lalpat Labs, Kotak Mahindra Bank, as well as LIC Housing Finance. So a lot of that happening in that F&O space. But let me also tell you the stocks which have now been included in the F&O ban list. Well, for today in the F&O ban list, NSE has included Balrampur Chini as well as Punjab National Bank into the list for July 21st. Well, as it has continued to retain Delta Corp, which has been there quite often in this F&O ban list, India Bulls Housing Finance, as well as L&T Finance Holding and Manappuram Bank and RBL. Those are the ones that have been retained in this F&O ban list. So that was the setup for you of what we have here today. But we also came in with a lot of earnings that we saw yesterday come out post-market hours. One of that being of Infosys, that the country's second largest IT player, really, and came out with, one could say, really surprised everyone with that slashing of guidance. That one really took everyone off guard. but their profits too have come in a bit subdued, coming in at 5,945 crore rupees for the quarter ending June, whereas which is down about 3% as compared to the previous quarter. But yes, like I was mentioning, the slashing of that full year revenue guidance, that only now at 1 to 3.5% from what was earlier projected at 4 to 7%. Now, yes, the management has gone on to say that there are different reasons of why they're doing this. They are seeing that their clients are slowing down in the decision-making prospects. All of that really coming down to why they're gone ahead and slashing this. But if you look at the other numbers, EBITDA margins, that guidance, in fact, they've retained to about 20 to 22%, whereas revenues, when you look at overall, that on a sequential basis has only grown about 1.3%. If you look at that number, that is coming at 37,933 crores. So a lot, not too much to look about or write about, and which could be why perhaps the stock might get a huge beating in trade, if we have to say the least. But we'll have to wait and see how it really performs. Now, the other earnings that we saw last evening was from FMCG major, that is Hindustan Unilever, who also came out with its Q1 numbers, but they have registered a 6.1% year-on-year growth in their revenues, which has come in at 15,148 crore rupees. This is just a mere 8% growth on a year-on-year basis if you look at it, whereas profits that have come in at 2,472 crores for this quarter. Well, that too just in line, one would say, pretty much not those numbers that one was expecting. But for them, they say that their home care, beauty and personal care businesses is what is really helping them move forward. Well, on the operating front, the EBITDA has grown about 8.4% to coming in at 3,521 crore rupees, and the margin expansion is barely off 50 basis points at 23.2% compared to the last year period. So this was the overall snapshot one could give you for what we saw in earnings. But let me also bring in my guests now and discuss some of these stocks, discuss some of the strategies that we could be looking at today, which ones will be in the spotlight. Joining me now is Kush Bohra, the founder of kushbohra.com. Thank you so much, Kush, for giving us your time and speaking with Moneycontrol this morning. I'd like to start by asking you on the overall the indices, the benchmarks really. We are literally 20 points shy of that 20,000 mark for the Nifty, but do you see these levels really sustaining, especially today that we have an earning heavy day to actually digest? Do you think that is a level that can be reached rather early at opening bell?
Stacy, first of a very good morning to you and all the viewers, and thank you for having me over. Quite interesting setup, and I'll tell you why. The markets had already seen a strong momentum, and if you see a couple of indicators, be it a technical indicator, which is RSI, and the Nifty was already above 80 yesterday, as per the closing. If you see PCR, the derivatives indicator, we were already at 1.44, which is also suggesting overheating. So if we get a gap down opening, which the opening rates where they've settled and they are suggesting, it's actually not a bad deal, because you want some cooling off to happen. The money that's waiting on the sidelines does need an entry point, and the kind of dip that we're seeing today, although not as deep as one would have honestly liked or expected, but it'll still provide an opportunity for some new traders, new investors to get in. I don't see this as too much of a trouble. We know why the indices are down, given the results, but from a technical perspective also, it's a very good idea that the markets are actually cooling off a little bit. Plus TGIF, right? Thank God it's Friday, so perhaps that effect would also play out. I won't be surprised to see the 20,000 mark hit sooner than later, because the kind of momentum that we've seen, we all know the FIIs have been buying. But if I just have to put that in numbers, if we take from expiry to expiry, the weekly expiries, then this was the 14th consecutive expiry where the FIIs were net buyers. So with that kind of money flow and the Indian markets absorbing any kind of bad news that's coming along, which where there isn't much, but whatever is coming along, it's absorbing, taking in its stride and moving higher, I won't be surprised that this dip actually turns out to be a buying opportunity. Incidentally, 19,700 and 19,800 is the support zone for the index. We're opening right at 19,800. I'll wait for the initial 10-15 minutes for the market to settle down. If any kind of settling happens around this level, I would actually look for buying opportunities on the index and in the stocks as well.
Right, so you think it's a good opportunity to buy, even though we're this close and this high valuation? You're still saying that it would be a good opportunity to buy. But what about the bank Nifty and that all pretty much all of the broader indices or sectoral indices, all of them are trotting high, one could say. But let me get your view now on the mid cap and the broader indices, mid cap, small caps. Is it a right time to be looking at those, and what are the charts speaking for them?
Sure. So let me just give a caveat here. We are already at a high and there is momentum, but the best way, an investment strategy to ride them is be light on your positions, take some money home. If you trade derivatives, then of course hedge your positions overnight, because this is the kind of gap down openings that the markets could see, be it global triggers or be it local triggers. So when the markets are riding so high on momentum and close to all-time high levels, it's not a bad idea to ride the momentum. Otherwise, there'll be a left out feeling, despite being invested. But you should probably take some money home, right? I mean, book
right,
profits.
Kush, that's the opening bell there. The Nifty opening, like we said, a little bit, tad bit in the red and gone below that 19,800 levels that we were talking about. So now back at 90,780 odd levels, down almost 0.95%. So it's taking that, like we were talking about, maybe that consolidation or some, people trying to book profits now if there is further momentum and rally going ahead. So Nifty there opening in the red, but we'll have to wait for at least 10 to 15 minutes to give it that time to set that pace that it really needs to take forward, because that's what we've been seeing, at least even in those last hours of trade for the day, where yesterday too we saw that rally where we reached almost that just 20 points away from 20,000 levels, but now then again back up to 19,800. So we will give it some time, especially for the benchmarks and where they're going to really settle in. But if you look at the sectoral ones, Bank Nifty, they're up above that 46,000 level, so pretty comfortably there in the green, whereas the mid caps, those are the ones that have been oscillating. Yes, the broader market. So they, both of them, mid cap as well as small cap, in the red, marginally one could say, but still in the red. Nifty IT, where we did expect this one to come under some bit of pressure after those earnings that we saw. So that one in the red too. FMCG too, the disappointing earnings from HUL. Well, we wouldn't want to attribute it all to that, but of course that having a huge play in this. Nifty Pharma too, down about 0.3% there on your screens in the red, whereas metal index, now that one too down about 0.23%. So all of those counters in the red, taking the, perhaps pretty much consolidation is what we are seeing, and which is why most of these sectoral ones in the red. Realty index too there in the red. So let's look at a couple of losers then, which ones are on that losers list this morning. Well, on your screens, Infosys, like we pointed out, of course it would have that hard landing, and we expected that right after those earnings and those numbers that we put out to you after slashing that guidance. There was nothing else that one could expect. So Infosys, they're really taking on the chin. Tech Mahindra, Wipro. So it's really all of those IT names that we are talking about, and which is why you're seeing the Nifty IT really taking that drubbing. HCL Tech, HUL as well. HUL again after earnings. So pretty much all of those earning counters seeing them right in the sea of red. But let's look at the gainers then. L&T, that one comfortably in the green. SBI, another one. Kotak Mahindra Bank also in the green. Nestle India now being quite that divergent, you could say, from, if HUL is in the red, then Nestle coming there in the green. Titan as well as ITC, another FMCG one there in the green. So perhaps HUL there only because of its earning in the loser section. But other gainers, we're seeing M&M, Britannia also there in the gainers list. So a lot, pretty much that mixed bag that we're looking at, and especially on a day like today, where we do have more bigger corporate earnings to be digested, and it is the weekend. So we will have to wait and see how really and where the markets want to then position themselves, whether it will be a new week in that 20,000 upward mark, or whether we're going to, still see further consolidation and find support at lower levels. But let me bring back Kush then to ask him what he is reading of these charts, whether they were unexpected lines for him today, or he was hoping that we would, start with that new record high, new peak surmounted of 20,000. Kush, what is your view?
Most certainly not. The ADR itself, on Infosys was down about 9%. So there wasn't, any chance that we would open at 20,000 or above that, right? But what is very encouraging is to see the fact that, we opened around 19,800, dipped marginally below it. And even though it's been less than 5 minutes, we're sort of recovering. Again, to just pick up the conversation on Nifty Bank and mid-cap that we were having, look, there has been buying in PSU Bank and private banks both. So that clearly explains the kind of momentum that we've seen in Bank Nifty. I won't be surprised to see 46,600 kind of levels on the Bank Nifty. 45,800 is where I see the support zone. As far as the mid cap goes, it's a bit of a cooling off that we're seeing. And from a technical standpoint, there's something called the negative RSI divergence that is very clearly evident. So I won't be surprised again to see some kind of profit taking. Let's not forget, they've moved up rather sharply. If I look at the mid cap index alone, it's moved from 29,000, beginning April to about 36,000. So a neat 20% return, in the last few months. So some cooling off is perhaps expected. But as I said, the overall setup for the indices is very strong. Any dip, in the stocks and the index would just turn out to be a buying opportunity.
Right. Kush, and what are the kind of sectors one should be cautious right now, given this kind of momentum and, the rally that we are seeing? Are there any kind of sectors or stock-specific action that you would say one should avoid at this point?
So one very clear sector that, one should avoid is the, agriculture-based, chemicals space. If you see the likes of UPL, SRF, these stocks have been under a very, under some pressure for some time now. The only types of bounce that we are seeing are more technical bounces. Otherwise, these stocks actually have been doing, rather badly, at least, when you compare them to the market scenario. Plus, I think globally also there was a warning issued by some of the major players. So that will perhaps play out. Any kind of weakness or, if you're looking for a hedge in such a market scenario, for me, SRF and, UPL short positions or perhaps a couple of puts will be, the shorting opportunities or the hedges that I will look for.
Right. And any stock ideas that you would like to share with our viewers? Any personal picks that you're making at this point?
A couple of them, this is a buyer's market at the moment, very stock specific one has to be. But Maruti seems to be making a very smart comeback. So if you see, the stock did actually crack, but then, it didn't even hit the 50-day moving average. So it's just rebounded from there. And with the kind of markets that we are seeing, the opening, the stock's already moved into the positive territory. So Maruti is a buy for me here. 9,990 and 10,300 are the trading targets that we are looking for. And 9,650 is where, we'll place our stop loss. One of the other spaces is the logistics space. In fact, a couple of names in this space are actually starting to do well. So for me, delivery is a buy. 430 and 440 are my targets on this one. 400 is where I would place my stop loss. A couple of interesting names and, a couple of pockets which are starting to, build some traction.
Right. So two picks coming there from Kush. He's looking at Maruti now as well as delivery. Quite that one would say, contra call there, because people have not been very excited about these new age tech stocks, especially, and, waiting for their earnings. Today, we are going to hear from 197 Communication, that is the parent of Paytm. So that earning also lined up later in the day. They come out with their earnings pretty late. But thanks so much, Kush Bohra. They're giving us all those stock ideas as well as strategies of how we should be trading this bull run. Thanks so much for joining in. Well, let's also talk about other stocks. Well, we do have Reliance, which will be coming up with its earnings today, and a lot to be looking forward to. We do know that this is the first quarter, which could be quite muted, and which is why we could see a lower number. We also have to look forward to Reliance Jio's numbers and what the ARPUs come out there. That will be a number that we will be tracking quite closely. But we are given to understand that it is the retail business which is going to be doing fairly well, and which could then offset whatever comes off the O2C business. So that is a call. We will be getting you all those details on Reliance as and when those numbers come in, and also special programming tomorrow to decode those numbers for you. But also, let me bring in my next guest now. Jyotivardhan Jaipuria joins me. He is the founder and managing director at Valentis Advisors. Good morning, Jyoti. Thank you so much for speaking with us here at Moneycontrol. But let me straight get to it and ask you, what is your broader outlook for the markets? We are, of course, on this bull run, but do you see it continuing? Do you see some kind of resistance now? And what are those headwinds that could possibly play out?
Yeah, so we've been actually quite positive on the markets all this while. And for us, it is still over the long term. There are two, three drivers. One is India is going to be the fastest growing economy in the world over the next few years. Second is earnings are going to, back it also. So we think earnings will be in double digit in this year as well as the next few years. In contrast, if you look, US is probably going to see a negative earnings growth for this year. So these are positives on a longer term basis. But near term, our view has been very cautious because, the markets were cheap or they were somewhere at fair value at the early part of this year, but now they've gone beyond fair value. They're getting trifle expensive. So ideally, we are looking for a price and time correction for some time, a bit of consolidation in the market so that it can absorb all the gains we've seen so far.
Right. Let me also bring your focus to a couple of stocks that we are looking at today. One is that of L&T. Now, Larsen and Toubro, that one has seen its board of directors who've gone ahead and considering a buyback on July 25th. That's the news that we're coming in, and also that they had their earnings. So now that the fact that they've given that go ahead and considering that buyback, it is going to be interesting to see how this really plays out. So I thought our viewers would really want to know why L&T has decided to come with this buyback that they will see on July 25th, that is. So that is one of the stocks. Well, we also have another stock that should be on your radar. That will be of Jindal Stainless, and this one is because the company has completed the acquisition of Jindal United Steels. Now, this is something that was in the work. In fact, the company had about a 26% stake in Jindal Stainless and now has gone ahead to acquire the remaining 74%. So it is going to be interesting to see these counters and how they play out, because other than the earnings heavy, we do have all of this news that is also trickling in. Let me go back to Jyoti then and ask him about how he is looking at these sectors. Today, in fact, we have a lot of metal, cement and, infra names that are going to be coming out with their results. We have Vedanta, JSW Steel, all of them. Jyoti, what do you make of these names? What do you make of this whole sector, the infra as a whole, right now, given, there isn't much that has happened from the government's capex plans that we were expecting. So how is one supposed to be looking at these sectors?
So, we've been positive on infra for actually 2 years, and our whole theme in the market has been a very simple theme. It's been one is we like, local plays. We don't like global plays. Second is within local, we prefer the investment theme to the consumption theme. So it has been these two simple themes. We've liked the infra names. The only caution I'll put now is they're no longer cheap. They were cheap 2 years ago. The margin for error was huge. Earnings was going to pick up. From here, valuations in many of them have got a little stressed. They'll still deliver returns if the earnings come in line with all better than what people are expecting. But if there's an earnings miss, they'll start to see a bit of pullback in the share prices. I would, say invest in stocks which are not too overvalued and where earnings visibility is a little higher. We prefer buying some of the smaller engineering plays rather than, some of the large engineering plays, because those are really well priced. Whether the smaller engineering plays, there's still room for them valuations to expand, and more than that, we think earnings are going to pick up quite a bit.
Right. Let me also ask you about the defense tech space. We saw a lot of buzz of late, especially with the Prime Minister doing all of these visits, and all of those counters really were up and about, whether it was HAL or even Mascot Docks. How are you looking at the def tech space, and what could be the reasons, the triggers from year on for this space?
So, defense, the way we look at it is it's a multi-year story that, they'll, over the period of next 5 years, 10 years, a larger part of the Indian defense budget will be manufactured by the Indian manufacturers rather than imported. And so in that process, a lot of these companies which are there today will be much bigger than what they are today, because they'll keep getting more and more orders. And, as they implement it, sales will pick up and margins will pick up. Having said that, a lot of these are well priced. So, just now, they've all run up in anticipation of some good things happening. The order book seems to be there, but whether they can implement this order book still remains a bit of question mark. So you have to be very selective in terms of valuation at the moment in buying them. If you get a correction in them, and these stocks do tend to correct quite a bit on some bad news, that's really the time to build that and put that into your portfolio for the next 5 years. But don't jump into any defense stocks when there's a lot of frenzy around them.
Right, and while we're talking about defense stocks, I would like to tell our viewers about HUL, because the state-owned defense major has gone ahead and signed a letter of intent with Argentina. Now, this LOI is on the productive cooperation as well as acquisition of light and medium utility helicopters for the armed forces. Now, this is along with the Argentinian Republic. So that tie-up definitely going to play out well for HUL, as well as, the fact that we are going to be getting more of those medium utility helicopters. One of them also being manufactured by HUL, which is your Tejas that is out there. So, like the Tejas, even the helicopters that they do manufacture. So, which is why defense tech stocks are also something that we are going to be keeping on our radar, especially on a day like this. Let me go back to Jyoti and get his overall perspective. Now, we did see HUL come out with its numbers. That one was a disappointing bit, you could say tad bit disappointing. But the other counters today, like Nestle or even Britannia, all of them are quite happy in the positive territory, one could say. So how is one supposed to be treading the consumer discretionary? Is the rural recovery back on track, we could say? And how are we supposed to be looking at these stocks specific?
So in general, we are not very positive on the consumer staple space. And a lot of that has to do with the valuation, that we think that the valuations there. In fact, if you look at the whole market, that's the space where I think the valuations are more stretched. Second reason is that, they are basically seeing, like you said, a slowdown in the rural demand. And if these monsoons fail, and it's been like a very patchy thing that we didn't have monsoons for some time, now we have lots of it. So overall monsoon picture looking good, but probably the spacing of the monsoon has not been great. And there is still the El Nino effect in the second half. So in general, I would say avoid the rural plays, focus more on the urban plays. What is going to help them over the next 6 months is that commodity prices have come down. So because of commodity prices coming down, you're going to see a better margin improvement which comes through. And we think, that is factored in the valuation that's so steady that will probably not make big money. We prefer some, like I said, some of those investment plays rather than these consumer plays.
Right. So you're saying be cautious about this and maybe go ahead with the rural, not the rural, but the urban plays. That one will actually all go well, because we'll have to wait and watch how exactly monsoon progresses. And that is going to be something we need to be watching out for. But what are the other headwinds, if I have to say, ask in general? We do have, getting into an election year. All of that has already started. What could perhaps be those headwinds for the India story? Well, we're always saying that India is that sweet spot when you compare it to its global peers. But if you have to give a broader perspective where we stand today, earnings are also in line with what we were expecting. Where does India from here move forward? What are we looking at the India picture like?
See, the next few years should be good. Like it's, unless we go and do something crazy, what we are seeing over the period is now more and more of the companies want to outsource from India. The China plus one or the Taiwan plus one story is very alive and kicking. And a lot of this has to do with geopolitics, plus the fact that India tried to do something with all the PLI. So in that sense, like I said, the economy is probably going to be one of the best performing economies over the next 4 or 5 years. Second is geopolitically, you're well positioned now. So a lot of the Western world is looking at India very positively, trying to put in more capacities here. What we need to be careful about is we should not get complacent, because every time, India starts to look good, there's something which happens internally which tends to disturb this. And that's, one thing we have to just continue with our reform process, continue to attract foreign investment and not do anything which, suddenly disturbs this scenario. Second is on the market. I think the bigger concern is basically the valuations today. So valuations are not cheap. They are high, I would say, in terms of an absolute sense also, because market is trading close to 20 times 1 year forward. But even on a relative basis, they're looking very expensive. So India trades at around 100% premium to emerging markets on a PE basis. So, that's not exactly cheap, because there are markets which are much cheaper than this. People are still willing to pay a higher multiple for, the growth story that India possesses. But at some point, I guess most people would be comfortable if the valuations contract from these 100% premiums to closer to 60-70% premium.
Right. So we're hoping that the valuations contract and that would make India even more attractive. At least that's the word coming in from Jyotivardhan Jaipuria. Thank you so much for speaking with us here
Thanks a
at
lot.
Money Control. Well, with that, it's a wrap and goodbye from this entire team who puts this piece together. Thanks so much for watching. Please do post your feedback for us in our comment section below and follow us on the link that's flashing at the bottom of your screen. For the rest of the updates, stay tuned to moneycontrol.com as well as the Money Control app.